Right. Today, I want to talk about the potential impact of a second Trump tariff spree on the US dollar, S&P 500, and gold. Now, so that you can understand in the short term what could happen, and in the longer term what could happen. Okay. So, introduction: the re-election of Donald Trump and the implementation of a new round of tariffs could have profound consequences for global financial markets, and this tariff is expected to kickstart tomorrow. Okay, so that's the reason why I want to study this, because you would then have a better idea what could possibly happen. So during his first term, Trump's economic policies, particularly his aggressive tariff strategy, significantly influenced the performance of key asset classes, including the US dollar index, the S&P 500, and gold, right? So the introduction of tariffs on steel and aluminum in 2018 marked the beginning of a major trade war with China, leading to retaliatory measures from Beijing and heightened uncertainty in the global economy. So with Trump's second term, investors and policymakers are closely watching for signs of renewed protectionism and its broader economic implications. Now, this report analyzes the historical performance of the US dollar, the S&P 500, and gold during Trump's first term, and projects how similar policies might impact these asset classes in a second term. So this is the chart of the US dollars, and so we want to see. So just before I move into that area and start talking about the charts, I want you to see this line here and this line here. Now it represents the entire time the Donald Trump is in his office, from the beginning, where this is the beginning of the first term, and this last line here is the end of his first term. Now, uh, going forward, all the charts will see two lines, and you have to know that I'm referring to the beginning and the end of the term. Now, what you can see here is that I have these little arrows and the labels right over here. Basically, it tells us that at this point of time, we have Trump imposing tariffs on steel and aluminum, and then you have the first round of US-China tariffs right over here. This is followed by tariffs that was extended to the European Union, Canada, and Mexico, and so on. Okay. So what we're seeing right now is that at the beginning of Trump's first term, in 2017, the dollar experienced a weakening trend despite the initial post-election rally. So we've seen that rally. It started first, then it started weakening. Okay, a weakening trend. That's what we saw, right? So while market initially responded positively to expectations of tax cuts and fiscal stimulus, concerns over trade conflicts contributed to the dollar's decline, because Trump was really pushing hard for all these tariffs, and that kind of you know created a lot of issues, and people just, like, prefer not to hold the dollars and invest in other asset classes. Okay, so later when you see, namely, that was gold instead, right? So by 2018, tariffs on China, specifically those imposed on steel, 25%, and aluminum, 10%, marked the beginning of the US-China trade war. As economic uncertainty grew, investors sought safe haven assets, driving the dollar higher. Now, in 2019, as tariffs extended to the European Union, Canada, and Mexico, the dollar continued to strengthen, though its gains were less pronounced as market had begun pricing in potential retaliatory actions. Now, however, in 2020, the COVID-19 pandemic caused an unprecedented surge in demand for the US dollars as investors fled to safety. This rally was followed by a decline as the Federal Reserve implemented aggressive interest rate cuts to support the economy, right? So by the end of Trump's term in 2021, the US dollar remained weak due to expectations of continued fiscal stimulus under Biden. So if Trump were to resume his tariff policies in the second term, which is going to happen tomorrow, an initial strengthening of the US dollars could be expected due to renewed safe haven demand, right? However, if corporate tax cuts are extended alongside tariffs, if they talk about this, they're going to put in a lot of tax cuts and they're going to push that, going to make it happen. Inflation could rise, forcing the Federal Reserve to maintain high interest rates, further supporting the US dollars. Now, one thing is very important, prolonged trade conflicts, however, could weaken global trade and reduce demand for the dollar in the long term. So this, you have to be clear. In the short term, it can go up. But if investors reckon that, overall, whatever is going to happen is really going to see is detrimental to the global economy, and that is directly going to affect US, they're going to dump the US dollars and invest in gold instead. Gold is one of them, and probably Bitcoin as well, if it were to follow gold's trajectory. Okay, so that will give you an idea how to deal with the US dollars. Next, we will be referring to the S&P 500's performance during the trade war. Now, this is the beginning, this is the end. We have corporate tax cuts signed into law right here at this point of time. And then the rest were the tariffs that were thrown into the market right here around February, and later on, after that. Now, this green area over here refers to the first US COVID case, and then followed by the huge drop. Now, as you can see, tariffs led to the market drop as well. Now, in the beginning, right, S&P responded positively to Trump's corporate tax in 2017, fueling that strong bull market as business anticipate higher profits, right? But then Trump started throwing in stuff like tariffs, and the first round of US-China tariffs in 2018 introduced volatility, causing a market correction. Okay, so as negotiations continued, market showed resilience and recovered, pricing in hopes of a trade resolution. By 2019, as tariffs extended to key trading partners, further volatility ensured companies with global supply chains faced pressure due to increased import costs, while domestically focused firms obviously fared better. Now, this is also expected for the current term as well. And now, the COVID-19 pandemic in 2020 led to a sharp but brief market crash, followed by a historic rally driven by Fed stimulus measures. Now, by 2021, the S&P 500 continued its upwards trajectory as economic recovery strengthened. So if Trump initiates another tariff spree, a short-term market correction would likely occur, particularly impacting multinational corporations relying on global supply chains. Okay, so we have to be very, very ready for this. Okay. Now, however, if Trump introduced another round of corporate tax cuts, market could recover, mirroring the 2017 rally. So if they talk about corporate tax cuts, yep, market can come up again. Now, the sector most affected would be those with significant international exposure, while domestic firms may be positioned for stronger performance. Okay. And finally, let's look into gold as a safe haven during economic uncertainty. Right, as usual, here are the labels. Gold price showed a steady rise between 2017 and 2018 as the US dollar weakened. Now, by 2019, right, concerns over trade tensions and slowing global growth further boosted gold prices. Now, the most significant price surge occurred in 2020 as investors sought safe haven assets and meet the economic uncertainty caused by COVID-19. Now, Fed interest rate cuts further increase gold's appeal as a non-yielding asset. Okay, so if Trump implements aggressive tariff policies in a second term, gold could once again benefit from heightened economic uncertainty. However, the long-term outlook for gold would depend heavily on Federal Reserve policy. Okay. So if inflation rises due to tariffs and tax cuts, gold could be an attractive hedge. Yeah. On the other hand, if the Fed maintains high interest rates to control inflation, gold prices could struggle as high yields makes bonds more attractive. Right? So as a conclusion, as you can see here, this pictogram shows an upwards movement and this shows a downward movement. So this is a conclusion that you can see. Short term, expect the gold to strengthen due to tariffs and safe haven. S&P 500 would be volatile, particularly for multinational firms, but it probably will be coming down. Gold would likely to rise on trade uncertainty. Now, for the long-term US dollars index, the US dollars would see inflation and trade conflicts may weaken it if there are, okay? And for S&P 500, tax cuts could fuel a rally. Global firms may, however, may struggle, okay? Now, for gold, Fed policy will determine its strength. Okay, so that's the conclusion. Hopefully, you'll be clearer after this. And that's the end of the report for today.